My first bull market in the 1970s, we had a 50% cyclical decline in the middle of a secular bull market. It took real cojones, or perhaps some stupidity, to sit through that decline and hang out.
And I remember once turning on BNN and seeing you being interviewed about the trends in human capital in the resource space. And I was thinking, like, this guy's got to be 19 years old.
Yeah. Well, listen, there are no straight lines in nature. If it was something that was just going to go straight up for the foreseeable future, I mean, that's something that I'd say was quite fake or being manipulated. I mean, you need to have these levels. You need to have some consolidation sometimes. And
what I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Hi guys, we have two interviews for you today. We've doubled up. The first is a conversation with Rick Rule, fan favorite. And Rick goes deep into bull markets of the past, lessons learned, what he thinks is different this time and what has not changed at all. Of course, it's full of Rick punchlines and some very sage advice for new investors investing in this precious metals market for the first time. Highly recommended listen. Following that up, we have an interview with Andrew Pollard, the CEO of Blackrock Gold. Now, Blackrock has been an absolute rocket ship since Andrew took the helm and turned that ship around roughly 2 years ago, and their recent drill results have only added fuel to that fire. Andrew's got a really interesting background because prior to taking the helm of Blackrock, a junior exploration company, he founded a company called Mining Recruitment Group, which handled executive search in the mining industry. So his background is actually in the human capital side of the mining industry, which obviously resonates with me. I'm all about the people, and I've always appreciated his take. I hope you guys enjoy this. If you do, hit subscribe, and then in the comment section, let me know who you want to hear from next, and I'll hunt them down. Enjoy. Awesome to have you back. And actually, a question I want to hit you with right off the bat, Rick, is I want to hear about the best decision that you've made in the last 6 months.
The last 90 days has been extraordinarily kind to the hyper juniors, the sort of $20 to $30 million market caps, which was nice. I'd made some mistakes in that sector a year and a half ago, and I was able to sell some of those mistakes at a profit, which is always a nice thing. So the parts of the market that I thought were overheated, I have been exiting. I've been putting money back to work in the precious metal sectors, in the high quality single asset producers. We're in a market right now where the best of the best and the multi-asset producers are trading at valuation multiples that are much higher than the high quality single asset producers. Okay. There's three ways out of this. The big guys can decline in price, or value conscious investors like myself can begin to come down market, or the big guys take over the little guys. Right. But that means that I have 2 chances out of 3 in making more money with this strategy. And so I'm attracted to it. I think the wind is really in the sails of the precious metal sector. Of course, in the speculative part of my business, which is exploration, where you're betting on exploration success more than commodity prices, I'm very agnostic as to commodity. I'll back a team with a track record of success, and a valuable, substantiated exploration story, irrespective of commodity. But for the investment part of my business, I really think the wind is still in the sails of gold and silver. And I think that other commodities will continue to be challenged by economic conditions that I think will be rougher than many other people believe.
Interesting. Okay. I'm glad you made that distinction between the exploration portfolio and your investments. Now, I think it was early this year, Ray Dalio was one figurehead who became super vocal, suddenly talking about gold in his portfolio and encouraging people to take a look. And it had been a long time. If I think about my time in this industry, Rick, I joined this sector at the very end of 2011. And so the majority of my experience has been people running from this industry. And to see somebody like Dalio step up and start becoming an advocate for gold, I think made a lot of the gold bugs cheer, right? And maybe was one of the catalysts that got this market running. But let's talk about this. The Oracle stepped up and put a $500 million bet on Barrick.
Buffett confirmed that by his valuation standards, a gold mining business, a business that's involved in a business that he doesn't actually like, is cheap. Buffett cares about the net, the delta between the net present value of a company's free cash flow, as he sees it, and its price. Its price is the enterprise value, which is to say market capitalization plus cash minus debt. That's the price that one would theoretically pay if one bought the whole business for the price of a share.
Yeah.
And he looks at how much free cash flow, what the net present value of the free cash flow is that he can purchase for the enterprise value. And he saw a business where the margins were increasing as a consequence of the gold price increase, at the same time that the input costs, in some countries at least with declining currencies, with low energy prices, were falling. And the net present value of the free cash flows of Barrick relative to the enterprise value were, from Buffett's point of view, cheaper than things that he has traditionally bought, like Coca-Cola and consumer products businesses. So I think it's very instructive that somebody who looks at businesses completely agnostically with regards to the big picture thought that a big gold mining company, which is priced, by the way, relatively expensively compared to the sector, was cheap. I think that's a very important lesson. And I think it's, people gather information or they react to information that they don't have to think about. Most people would prefer to feel than think. And so as an example, the gold narrative now is the same as the gold narrative that existed when Dalio was getting long gold. But nobody wanted to because the price had been dead. The narrative when Dalio began to buy at $1,100 was cheaper. So people who are buying now are getting a much worse deal than Ray Dalio did. But the price information that they received, the fact that gold went from 1,200 to 2,000, made the narrative more believable. It's interesting that when some of the value has got out of the print, the masses storm to the print because price information is easy to feel, while strategy requires effort, and most people hate effort. With regards to the gold community touting Buffett, what the gold community is going to say is that Buffett has acknowledged that he was wrong.
Yeah.
Well, that's ridiculous. That's ridiculous. Buffett has a float, which is to say insurance premiums received prior to claims made that exceeds $100 billion. In a negative interest rate environment, Buffett would be well advised to collapse that because the float earns money on a positive yield but loses money in a negative yield. You don't see Buffett shutting down his insurance business. Buffett isn't talking about the set of circumstances that would cause gold to go crazy. In the context of his buying Barrick, he looked at a business that was cheap. In his notes, he did say that we are in uncharted waters with regards to the fiscal response to the policy dilemmas around an unwinding economy in COVID-19. So he did acknowledge that the efforts of the Fed and the efforts of Congress are likely to produce either inflation or stagflation. But that wasn't the important part of his investment. The important part of his investment was the fact that the net present value of the free cash flows of Barrick were cheap.
How much does the gold to silver ratio matter to you? Is that something you watch with any real significance, or is it kind of in the periphery?
Your Silverbug listeners are going to hate what I'm going to say.
Yeah, let's go for it. What do you got?
I think that the gold-silver ratio is a floating abstraction.
Okay.
It's a factoid. It's something that's true that doesn't matter. The idea that prices should be set by the relative scarcity or abundance of a substance in the Earth's crust is, on the face of it, silly. Prices are set by utility, supply and demand. So the utility of gold, which is the fact that it's really money more than anything else, relative to silver, which is both money and an industrial material, the utility offered up by each is very different. And the consequence of that is that the supply and demand of both are very different. Secondly, of course, almost all the gold that's ever been mined still constitutes supply. We do something silly with it, actually. We take it out of a hole in the ground called a mine. We put it in a hole in the ground called a vault, spending money in the process. Silver, however, gets used. It is an industrial material as well as being a store of value. Secondly, of course, most gold is produced from gold mines. Most silver is produced as a byproduct of other metals. So to understand the supply side of silver, you have to understand how much copper ore will be produced, lead ore, zinc ore, how much byproduct silver will be produced with gold. So I would suggest to you that the cost of production, the rate of production, and the rate of consumption are more important determinants than the relative scarcity or abundance of either gold or silver in the Earth's surface. In the near term, however, something doesn't have to be important to be relevant, which is to say that people act on their emotion. And the lovely thing about the silver gold ratio is it just is. You don't have to think about it. It doesn't matter, but that doesn't matter either. In the very near term, remember Buffett famously saying that markets are voting machines. They measure people's emotions. In the long term, markets are weighing machines. They measure what something is worth. And I guess if you're comfortable with the way people vote, I never have been, then the short-term trends matter to you. They don't to me.
Right. And so in that context, the ratio is almost more of driven by sentiment rather than reality, back to your point about feeling over thinking.
In the very near term, absolutely. It's easy to grasp, despite the fact that it doesn't mean anything.
Sure.
It's easy to put your thumb on. In the last two bull markets that I participated in, the bull market of the decade of the 70s and the bull market in the decade 2000 to 2010, the metals followed very similar patterns. I believe I'm in my third bull market now, and it will play out the same. Gold moves first because the gold buyer is motivated by fear. The real gold buyer was buying in 2017, 2018, 2019, and he was buying it almost in fear that the price would go up. I was one of those. They looked at the policy response to various circumstances and they thought, all this can do is debase the currency. When the fear buyer establishes momentum in gold, a new class of buyer comes in. The greed buyer, one who looks at the narrative, looks at the fact that gold is bottomed, and comes in. Gold stock prices, moved 9 to 12 months after the gold prices moved. This makes perfect sense. They're companies, they're not gold per se, nor are there call options on gold really. The increase in the gold price impacts the margin, which improves the income statement and hence the balance sheets of the gold companies. So the gold companies trail. And silver trails gold too. But silver is poor man's gold. When gold establishes the momentum, when silver begins to move, and it often takes 9 to 12 months for silver to begin to move after gold has moved, it tends to move much faster and much further. I think there are several reasons for this. It attracts a different buyer. The silver bug is really, truly a gold bug on steroids, a strange beast. And also, it democratizes ownership of precious metals. There are millions, perhaps billions of people around the world who can't afford the unit cost of a meaningful amount of gold to store wealth, but they can afford silver, particularly in South Asia. Bangladesh, Pakistan, India, Sri Lanka, tens of millions of people, when they have the ability, store their wealth and they can afford the low unit costs of silver rather than gold. So silver tends to move after gold, but further and faster. I remember in the year 2000, Jay, having to write a letter to my client base who were instinctually oriented towards contrarian investing, precious metals, and natural resources. I wasn't able to write a letter called The Case for Gold. I had to write a letter called A Case for Gold to substantiate to the faithful that there was any case whatsoever to owning gold. And within 3 years, the gold price doubled. When the gold price moves, it tends to really, really, really move. Let's look back to the two prior bull markets, 1970 to 1981. $35, admittedly price controlled, I'm talking US dollars, to $850. Fast forward to 2000, between 2000 and 2010, $252 to $1,900. So when you think about what gold can do, if you allow yourself the use of the word can, it can do a lot. Now let's look at the why, just for fun. Let's look at why the gold price is moving, because that gives you a sense of where it could go. The world's benchmark security, the security that everything else is priced against, is the US 10-year Treasury. It's the largest, deepest, most liquid market in the world. And it is in many ways a proxy for US dollar-denominated savings. The US 10-year Treasury pays right now about 50 basis points, 0.5%. In a currency that's declining, according to the Congressional Budget Office, by 1.6% a year. The US government is telling you that if you trust them with your money for 10 years, that they will give you back substantially less than you gave them. My friend Jim Grant calls this return-free risk. So gold's primary competition is return-free risk. Will it get better? Well, my own belief is that there is a broadly based political constituency to keep interest rates low. Among other reasons, because the government isn't the only debtor. There are public and private debtors. So my suspicion is that the government will do their very best to keep interest rates artificially low. And that makes sense in a democracy too, Jay. Democracies are a forum for social disputes. One of the big disputes is a dispute between spenders and savers. And spenders are much more numerous than savers. So in a democracy, they're going to win. And they want low interest rates. They don't need to reward savings because they don't have any. Then the second thing that you have to look at is the credit quality itself. On balance sheet liabilities, I'm using US dollar terms in US governments now. On balance sheet liabilities are approaching $24 trillion at the federal level. In fact, in the month of July, we added to the federal debt by almost $1 trillion, over $800 billion in additional deficits in 1 month. Now, if you believe that Congress and the president will suddenly get religion and stop spending more than they earn, then you believe that the gold price is going to go down. I don't happen to hold that point of view. I think that the debt and deficits matter and that arithmetic matters. And for those reasons, I believe that faith in savings instruments denominated in US dollars will continue to deteriorate. And as a consequence of that, that the gold price and collaterally the silver price will continue to increase. If you saw a circumstance where interest rates in the United States went into positive territory, real interest rates in the United States went into positive territory, you want to trim your gold position very aggressively.
Okay.
One more thing, Jay, in terms of where gold prices could go, and I want your listeners to pay real attention to this. The market share of precious metals and precious metals related investments in the United States, according to a fairly recent study, are between 1/3 and 1/2%. That is, precious metals and precious metals related assets comprise less than 1/2% of all savings and investment products in the United States. The 3-decade mean market share for precious metals and precious metals related assets are between 1.5% and 2%. So we don't need a circumstance where there's a massive reset, where they go to a gold standard and the dollar collapses. All we need is a return to the 3-decade mean, and demand for precious metals and precious metals related investments will somewhere between triple and quadruple in the largest investment market in the world. Right. Think what a tripling or quadrupling of demand would do.
Does anything stand out in the precious metals market that investors are not paying enough attention to?
Younger investors who have bought the narrative don't understand what a pullback looks like. And precious metals markets, including the equities, always have secular bull markets that are characterized by amazing cyclical declines. My first bull market in the 1970s, we had a 50% cyclical decline in the middle of a secular bull market. It took real cojones, or perhaps some stupidity, to sit through that decline and hang out. 15% declines, 20% declines are commonplace. You know that I frequently refer to the Barron's Gold Mining Equity Index, which is the broadest based and longest lasting gold mining equities index available.
Right.
If you look at that chart going back 50 years, you will see 2 prior bull markets, and you will see 8 recoveries from oversold bottoms. And declines in the middle of those steep ascents are breathtaking and numerous. So while I believe that we'll see higher highs and higher lows, a 20% sell-off wouldn't surprise me at all. Right. Not one little bit. The world seems to exist for the minute right now. And I suspect that the Robin Hood followers of gold are in for a couple of religious experiences as they earn their stripes.
I think as an investor, it's super important to understand what type of investor you are and then play to your strengths, right? And when I say that, you know, I always harp on the people all day long. It's my number 1, 2, and 3 criteria. In the precious metal space, for sure, and I get challenged on this point a lot, responses to my newsletter. People write back and say, oh, you're overlooking so many important details by not obsessing over the project and the geology and the jurisdiction. But like I said, you have to play to your strengths. I run a conference business. I have conversations like this for a living. I know the people, right? And that's when I make a bet or take a position in the company, I'm betting on the judgment and decision-making of that CEO and their ability to surround themselves with great people, chase the right business opportunities, have a plan C when plan A and B fail. You know, Rick, are there any personalities other than yourself that you think new investors should be looking to as they enter the precious metals industry for guidance?
Well, there are a lot of good people out there. I mean, there's some work being done by newsletters, as an example, Joe Mazumdar and Brent Cook, although they're more technically than people oriented, frankly.
Sure.
There are some young groups. You know, I of course cut my teeth with the Lundins and the Clive Johnsons and the Bob Quartermains and the Ross Beatties, the Adolph Lundins, the Ned Goodmans of the world. But there's lots of good people in the market, younger people that you can pay attention to. I should hark back to your question too. Knowing yourself as an investor, people are all important in market capitalizations below $1 billion.
But it's really good to have you on the show, Andrew. I always love catching up with you. And you know, when I was preparing to chat with you today, I was thinking about kind of the first time I met you, and you know, I knew who you are back in the day, even 10 years ago, because you ran the mining recruitment group. And I remember once turning on BNN and seeing you being interviewed about the trends in human capital in the resource space. And I was thinking, like, this guy's got to be 19 years old, and he's the subject matter expert on BNN. So, you know, you're still considered to be a young entrepreneur in the mining space, but you've always been a young entrepreneur in the mining space. Now you're running Blackrock Gold. So really excited to catch up with you and share some updates of what's going on with you, with our audience. And I want to start just by talking about the gold market because, you know, there's a lot of questions going on right now. You made a bet on the gold market turning around, you know, a couple of years ago when you departed Mining Recruitment Group, took over Blackrock Gold, rewarded your shareholders almost immediately with some very fast decisions. But did the market, so since then, you know, we've seen a massive uptick in the gold price. Did it heat up faster than you thought? You know, was there any, and now we're in this correction territory, but did the rate of price increase surprise you, or was that kind of up to your expectation?
Yeah, it's a good question. You know, I joined Blackrock back in May of 2019. I wasn't planning on departing my executive search practice, the Mining Recruitment Group, but it turns out, you know, I originally joined Blackrock just to be on an interim basis and help right the ship. And sometimes you just capture lightning in a bottle, and it turned out I had a bit of a knack for that, and I just decided to put my practice on hold, and frankly, I've been having a lot of fun ever since. The gold market did come back substantially right after. I don't want to say it was correlation or causation, but it's a matter of fact that when I stepped in, I think gold had been on like an 8-week down cycle there, and was getting no attention anywhere. And then about 2 weeks after I joined, everyone's talking about the gold space again. So maybe I gentrified it up a little bit. But either way, I was happy to get all the help I could get right out of the gates there. As you said, I mean, we had a epic run right out. I joined Blackrock. It wasn't because of inspiration. Frankly, I said in my first interview that I did that it was frankly embarrassing to have to get behind a 3-cent company, insolvent at the time. It only was valued about the same as what a studio apartment was in Vancouver. But I said, this company has a great project. It had the wrong team, and for 15 years, I built a business predicated on one thing, that management matters, and it was my job before this to ensure the right people were behind the right project. So I knew that this was a challenge I could get behind. So when I started building Blackrock, I didn't build it to run a $5 or $10 million market cap company. I built this company to have the bench strength and to get the respect it would deserve if we were running a $200, $300, $400, $500 million entity. And since then, we've added over $120 million to our valuation.
And you hit on something that I find so key. Management matters. And with your background in executive search, it's one thing that caught my attention when you made the transition to running a company, because anybody who watches my channel or reads my newsletter knows I am people over everything when it comes to valuing small cap companies in any industry. I think it's the 100% most important criteria, right? The right management will be responsible stewards of your capital, will chase only the best business opportunities, not throw good money after bad. And if plan A and plan B get compromised, they're going to have the energy and resilience and foresight to have a plan C and hunt that down. And so, we're seeing the gold price correct a little bit. I think after such a frothy rally, it's healthy. You're a gold investor and a gold entrepreneur. What's your take, Andrew?
Yeah, well, listen, there are no straight lines in nature. If it was something that was just going to go straight up for the foreseeable future, I mean, that's something that I'd say was quite fake or being manipulated. I mean, you need to have these levels. You need to have some consolidation sometimes. I mean, it's the destination doesn't change, but it doesn't mean you have to go like this. I think it's very healthy. I invest in, if a stock goes on a run and then it pulls back, I'm not concerned. I'm saying, okay, well, at least I can tell this is a real deal. It's not something that's just been promoted, up as an exit for insiders. No, if it's something that's real, you'll see lots of good entry points along the way. But as long as you're headed in that direction and you can see they're building on something, then that's what it's all about. And I mean, even, you see that in my stock. I mean, at the end of the day, I joined the company as a shareholder first. I saw an issue with a problem that I thought I could solve. But the very first thing I did when I joined the company was I canceled a very cheap financing that the previous management had offered. They were going to issue something like 32 million shares at 5 cents with a half warrant at 10. Would have killed the company. Would have just given us this cap structure that we would have never gotten above 7-10 cents. Even in the best world. I canceled that, and then we self-financed for a few months, and then we raised money at 10 cents. And even at that, we raised about a third of the money they were seeking, because I want to build that value. I'm not after having the highest market cap company. I want the highest stock price. And we've shown that we can do it ethically. And this is all based off quality. I mean, we hit what we call a $100 million drill hole because, our very first maiden drill hole into our silver project in Tonopah added over $100 million to our market cap and attracted the likes of Eric Sprott into our deal. But guess what happened? When you generate those sorts of returns for investors, and keep in mind, we went from 7 cents on March 15th to a high of 161 about 4 months later. That's significant wealth being generated right off the bat, but it was real. It was based off of something. And guess what's happened? There's lots of people who have made a significant amount of money, and they're taking some profits, and our stock has gone down a fair bit, and then it's consolidated, and now it looks like it's sort of moving back up. But it's not a straight line up. I mean, look at Great Bear's chart. They hit their discovery hole a few years ago, 50 cents to $1. to $4. I think there were 8 to start the year, then they moved down to 4 at COVID, another 19, 20. It's not a straight line, but that's a very natural looking chart that's been built on by adding real value and tangible results. And I think those are the ones that are quality, and oftentimes there will be chances to get back in. So the global the gold market is no different than any other stock chart. At the end of the day, there's a certain cyclicality to it all. There's profits and losses and all these things you have to deal with, but ultimately that's why you should focus on quality management teams and projects in good jurisdictions.
Right. And BlackRock's Newsflow has been super consistent. Yeah, I mean, what a run you guys have been on since you released those drill results. So congratulations on that performance, Andrew. And the price is correct a little bit. But you made an announcement this week, which is very, very significant. And I want to touch on that. Before we do, though, just catch up my audience on your drill results. So what did you release in the last sort of month and a half here that caught investors' attention?
Yeah, so back at the end of February, we made an option to purchase the oath by Ely Gold Royalties. They consolidated one of the largest historic silver districts in all of North America, and easily one of the highest grade districts too. And it's not in the Yukon or southern Mexico. This happens to be halfway between Las Vegas and Reno. It's a town called Tonopah, which was, this time 100 years ago, one of the most significant precious metals mining districts in the US. I mean, there's countless publicly traded companies mining this ultra high grade set of silver and gold veins. And they produced 174 million ounces worth of silver, nearly 2 million ounces of gold in the span of about 20 to 30 years. And then silver prices took a huge jump off a cliff in around 1922, 1923, when they went from $1 an ounce down to 35 cents an ounce within a span of about 2 or 3 years. That effectively was the final nail in the coffin. All of these companies went belly up. They couldn't survive with these low metals prices. This has been hiding in plain sight ever since, because some of these claims, which we just got our hands on, our property has multiple historic operating mines in it, and no one has put a single drill hole into these workings since production shut down in the 20s. These are patented claims, and they've been passed down generationally through certain families, for a better part of 100 years. And Ely was able to do the hard yards, consolidate more than half of the silver district, wrap it up in a nice bow, and then we signed the deal to get our hands on this at the end of February, which coincided with the all-time silver gold ratio spread. It was something like 128 to 1. So silver could not have been more backwater back at that point. I got a whole bunch of flack for doing it, but at the same time, I saw this fit perfectly into our narrative. BlackRock's into precious metals in Nevada. We're into our other projects, also a low sulfidation epithermal gold project up in northern Nevada. Reno is the halfway mark between both of our projects. Tonopah is about 3 hours in one direction. Silver Cloud up in the northern parts, about 3 hours in that direction. And effectively, Reno's home base. And guess what? That's where our head geologist and executive chairman, Bill Howard, lives. So it made perfect sense. We got a hell of a deal on it. And then, our very, very first drill hole into Tonopah West, targeting one of the historic mines that shut down, not because they thought they ran out of ore, but because of metals prices. We nailed it. We hit 30 meters of about 1 kilogram per ton silver equivalent. We also hit 2 other vein zones, which had up to 3,600 grams per ton silver equivalent over 1.5 meters. And we've seen gold grades up to 18 grams. So, I mean, this was the $100 million drill hole. More importantly than that, it laid credence to what we've been telling the market for the few months leading up to this as we geared up to drill it. And that's that, hey, we've got 3 different past producing mines on our property. We're working off information that's 100 years old, but our targeting consisted of digitizing some hand-drawn cross sections, going through all the historic reports from each of these companies, figure out where the veins were, where the workings were. But you really don't know until you put a drill hole into it just how these things measure up versus the real world. So when we nailed it exactly, and we hit this vein, which the old timers, when they stopped mining this mine, it said the vein was 24 meters thick. They never got around to continue mining it. So we were telling people we'll hit something about 24 meters thick, and we did. And all of a sudden that opened up the rest of the project for us, because it says, holy cow, these guys have 3 other targets, and we could potentially bring three historic mines back to life, or at least breathe new life into them on this maiden round of drilling, and that's just what we're doing.
Okay, yes, and that's really made Tonopah the darling of Blackrock Gold, hasn't it? Which was probably is probably the catalyst to the announcement you made early this week. You're talking about spinning out your Silver Cloud asset.
Yeah, so Silver Cloud's a massive grassroots opportunity. It was actually the reasons why Bill Howell and myself both joined the company originally. It's the reason why I invested in Blackrock right off the bat. I thought this has to be one of the best grassroots opportunities around anywhere in the business. It's 45 square kilometers right at the top of the Carlin Trend where it intersects the Northern Nevada Rift. So on one side of the project, you've got some of the biggest gold mines in North America, probably the biggest mining complex in the entire world, in fact. And then on the Northern Nevada Rift, we're directly adjacent to two of the highest grade gold mines in Nevada. And this project hadn't been drilled to Kingdom Come. It had a really bad royalty deal attached to it previously. The reason what attracted me to Blackrock was the fact that they were able to get a very clean deal. Teck formerly had this property, Newmont formerly had this property, Placer Dome had this property, 3 small rounds of drilling by all of them in 3 different target areas across this massive property encountered gold, and no one had really ever followed up in 15, 20 years. So we've got a really clean deal on that. And we've got a big program about to commence. We've got a 3,500 meter RC program, probably 14 holes. This will be the biggest program that project's seen since about 2002. The reason we want to spin it out is twofold. One, we've got a monster by the tail at Tonopah. I mean, we've put out 2 sets of results. I think we've released about 10 drill holes so far. We've encountered 9 different high-grade veins from 2 different historic operating mines. We've seen 4 of those veins have assayed at over 1 kilogram per ton silver equivalent. Anytime you're giving precious metals results in kilograms per ton versus grams per ton, you're onto something good, we think. And this is going to keep us really busy. We've got 2 drill rigs turning at Tonopah as we speak. We're trying to do our darndest to find a 3rd one and just keep expanding this. But yeah, Tonopah is going to be the focal point, and this is. It's a very different proposition from Silver Cloud, because Silver Cloud is a grassroots endeavor. We have to figure out not only where the veins are, but heaven forbid we hit them, then we have to figure out which way they're going, the perfect elevation, what the rock packages look like. At Tonopah, we're not starting with a clean sheet of paper. They mine these things for decades. We know exactly where the workings were. We know where they stopped. We know the grades. We know the orientation. We know the strip. It's fishing with dynamite. We think the historic miners barely even scratched the surface in terms of what they've taken out versus what they've left there for us. So we're going to put the blinders on as Blackrock. We're going to build a project-specific team just for this. Maybe use it as an anchor to try and acquire other properties in the area and turn Tonopah into a Tier 1 district mining complex. And Silver Cloud gets spinned into a new company where it can get the valuation it deserves. Because this time last year, when Silver Cloud was the only asset in Blackrock, it had a $20 to $30 million valuation on that. Right now, it's getting nothing in the company because everyone's it's live or die by Tonopah, and that's a great problem to have. So this will unlock value for shareholders. It will be able to bring in an exploration team just for this. It'll focus on Silver Cloud and other Northern Nevada stuff. But the best part is, you'll have an interest in 2 public companies. Both train on tracks, both with a management team that has proven they can add some value, and amid a gold $2,000 an ounce backdrop. Things have never looked better. So certainly good reason to stick around and not sell any profits, or maybe, there's a reason to, if you're going to be getting shares in a new company just by sitting around, it'll allow us to build some value in Tonopah as we go too, and who knows what we can do here.
Right, and that's the real opportunity with Blackrock right now. The price is corrected since you released those drill results. Investors looking to buy the dip have that opportunity, and if you proceed with this spin out, each shareholder will end up with an interest in 2 public companies, the historic Tonopah, and then an early stage exploration project in Silver Cloud.
When I joined Blackrock, it was the complete opposite of what this new co would look like, because I inherited a massively bloated shareholder cap structure. The company was insolvent. The company was really lost. With this new company, effectively what we're saying is for every 3 shares of Blackrock you'll get 1 in the newco. So we'll start out with 30 to 40 million shares outstanding. But not only that, this is a company that's going to come out of the gates with people like Eric Sprott as one of the largest shareholders. We've turned the corner from retail to largely institutionally held in the span of like 3 or 4 months. BlackRock raised $4.5 million in June, and then we got another $7.5 million done at the end of July. And all of this was primarily institutional. So, this new co will not only be tightly held, it'll be well backed right out of the gates. And it's got a hell of a project. I mean, following in the steps of, standing on the shoulders of giants in terms of Newmont, Teck, Placer Dome. It's at the top, it's in one of the most geologically active areas for gold mining in the entire world. And this new company is going to have lots of, it's about as target rich as it gets. So we think we can add a lot of value there too for investors.
Okay, awesome. Now for anybody who wants to take a deeper dive, can you give us a quick highlight on your cap table, Andrew?
Yeah, so as of right now, we're trading with 106 million shares out. Fully diluted, that would be 135 million or thereabouts. Now, anytime a stock goes from 7 cents to a high of 160, and we've been trading serious volume ever since we hit, that puts literally every single warrant we have right now in the company in the money. Should all of those warrants get exercised, that'll bring in another $12 million or so into the treasury. And once again, we're sitting pretty good right now in terms of where we're at in the treasury as we speak. So yeah, lots to look forward to there. I mean, we'll be, we're looking to expand the program at Tonopah as much as we can, and luckily we won't have to go back to market unless someone comes to us with some real good terms. But with these warrants, which are outstanding, the nice thing to know is that none of them have a forced conversion provision on them, meaning there's not going to be one time where the company is going to say all these warrants are getting called and investors will have to eat through 20 million warrants. No, these can be spaced out for a better part of 2 years, so should be nice and orderly, and hopefully we can see some more money just naturally cycle in each month.